I would like to welcome everybody who's listening to our panel on what advisors really want from fund companies. We know that you all spend a significant amount of time and money marketing your ETFs and your mutual funds, but it can be really hard to break through to an RIA who's already got a stable of funds that they are happy with, or even to a larger company that might have a research department, due diligence, and so on, where they're putting out lists and making recommendations. And you want to know, how can you break through and really talk to those advisors as well and have them turn around and ask research to take a better look at you. So today we're really going to focus on those points. What can you do as a fund company? What can you do that's effective to ensure that advisors figure out who you are, get to know your funds, get to know what you think, and what your products are? So I'm Marilyn Dale. I'm the Director of Creative Services for SunStar Strategic for about 10 years, and a long career in financial services before that. And I have two gentlemen joining me, Al Delcorse and Rob Barker.
Hello, Marilyn.
Here they come. Hi.
Hey, Marilyn.
Thanks so much, guys, for joining us today. I'd like both of you to introduce yourselves. So Al, we'll start with you. Tell us a little about yourself and your practice.
All right, I will do that. As it turns out, I've been in the investment industry now for over 38 years, having started with Merrill Lynch back in 1982. So a long time in the industry. At Merrill Lynch, I was a financial consultant. I was also the head of the senior manager of their business financial services unit in Chicago. I think my most dedicated position of representing a firm over the years was my experience with Calamos Investments. Spent 10 years with Calamos Investments, where Marilyn, you and I worked at one point in time. And it was I had the opportunity of calling on the major firms. At that time was Merrill Lynch and Smith Barney, Prudential, and UBS. And at one point in time, I was a national sales manager at Calamos Investments. And when I left, I was the director of institutional sales. A little bit more on the wholesaling side of the coin is that after Calamos, I went to Mann Investments out of London. Mann Investments at that point in time was the world's largest provider of alternative investments, specializing in managed futures and hedge funds and structured products. And then in 2013, I started my firm, Equilibrium Wealth Management. And it's been exciting because it's given me an opportunity to take all those years of experience and put it together so that I can provide institutional-like portfolios for our client base. My son, Jeff, just recently joined the firm after having 15 years of experience in the industry. So he's an integral part of my succession plan.
Very good. Thank you, Al. Rob, tell us about yourself and your practice.
Thanks, Marilyn. I didn't think I'd feel like a rookie, but listening to Al, I think I'm a rookie. I've been at it 25 years, almost 25 years this fall. I started all in the financial advising world, started with Fidelity Investments. Went through that for a handful of years, went to grad school, got an MBA, came out, worked for Goldman Sachs for another handful of years. And I've been a wealth advisor with Fidelity now with Wells Fargo now for almost 15 years. So that's the private side of it. My book is about 850 million. I've got about 51 clients, families that we serve. So that's where I've been. Again, not near as robust, Al, as you, but I'll give it my best.
Thanks, Rob. I'm sure you're doing just terrific. Just a reminder to the audience, we do have Q&A available we'll answer after the session. But if you can enter questions at any time, that'd be great. Also, I think there were a few advisors who signed up. If you have some comments as we ask the questions that you'd like to share, I'd be happy to share those with the group as well. So put those in. Okay, so let's start with each of you telling us, what's your biggest challenge day to day? And is there anything that fund managers can do to help? Al, you want to jump in?
Yeah, I would say The biggest thing on the top of my mind is asset allocation. I'm always thoughtful about, do I have the right asset allocation for each level of risk that I have for my client portfolios? I've always thought that asset allocation is the biggest part of the pie. And we spend a lot of time on looking at asset allocation. And with my background, we go beyond stocks, bonds, and cash. So we include a category that I created called defensive growth, and also the area of alternatives. In our defensive growth category, we manage convertible securities, and we buy right funds. So asset allocation is important, and we make it a little bit more complicated than most advisors do. So I would say that if a fund manager has a way of helping an advisor with asset allocation, creating the efficient frontier of their portfolio, showing the value added of investments, it would be helpful. And it's always helpful to get a portfolio review by fund managers is just kind of an outside review of what we're doing internally. The other thing is that when we look at our portfolios, and again, as part of asset allocation, we look at tilting towards different sectors. So today we're looking at technology and innovation and healthcare and commodities, where firms have an expertise in the sector allocation, and they bring to the table good information about the pros and cons of each sector, especially relatively speaking. I think that can be helpful to a firm.
Terrific. Let me ask you one question on the asset allocation. When you say you'd like a fund manager to help you review, are you talking client by client? You're talking about a model portfolio? How deep are you going?
That's a great question. So we have built models, and every so often there are firms that have, the Zephyr capability, et cetera. We do our own internal review and analysis. We have our own internal program. But I like every so often for a firm to take my model and show me what they think it's about.
Okay, great.
It is helpful.
Excellent. Thanks, Al. Rob, how about you? What's challenging for you?
Yeah, lately we've seen like we've had our fair share of challenges, right? As a world, but yeah. I think the things that challenge me most and advisors I work with most, time management, making sure that time is being used efficiently, both with client contact and research, study, creating portfolios, as Al's mentioned. I think the other thing that makes that keeps us up and keeps us on our toes is being relevant. Right now, there's information overload. If you can get as much information as you want, some of it filtered through news channels, some of it unfiltered through just individual research, and making sure that between those two things that we are talking specifically to clients' needs, wants, goals, aspirations in a way that resonates with them. I think that's our biggest challenge every day, is making sure that we deliver on those aspects of being relevant and doing it in a way that doesn't take us, 12 hours a day.
So Rob, when you say being relevant, are you saying having information at your fingertips that is useful to me personally versus Al personally? Is that what you mean by that? Or?
Yeah. So in my practice with my clients, everyone's a little bit different. Right? Mm-hmm. Everyone has a little bit different objective. Everyone has a little bit different way to go about achieving their goals. And as the advisor, what we're trying to do is make sure that all the information we can gather, we can filter for you and give you something that's meaningful to you, rather than a broad base, hey, by the way, here's what the market did, right? That might be meaningful to everybody, but what's most meaningful to you as one of our clients and as an individual, as your family, and as it relates to the goal we're trying to achieve together.
Okay. Does that kind of take us down the path of, are you looking for educational materials for these clients or market economy, what's happening out there today?
Absolutely nailed it. That's exactly what it is what we look for are ideas. I think more and more we're paid for advice, and ideas are what helps us stay relevant. And so when we look to these clients, is there something new out there? Have we missed something? research coming out. We just had a segment before us about kind of new and different products coming to the market. And how do we incorporate them? Can we incorporate them?
Mhm.
I think there's a whole gap there that is filled by the mutual fund industry, wholesalers that come meet with us to say, well, I have an idea.
Okay.
And that's the problem we try to solve by staying relevant. Did that idea resonate with me first? And which clients are in my mind that will use that idea?
Okay.
And Marilyn, can I add to
Please.
his point, please?
Mhm.
It's interesting. I had a client about 4 or 5 years ago that was doing some reading, and he was looking at how terrible the world is in terms of clean water.
Mhm.
So we had a nice conversation about it, and he said, "Is there any way that I can monetize this? Is there any kind of fund that you have that will address this topic?" So I looked around and I did find one of the fund families that I work with that had a water fund.
Okay.
And so it was really interesting to Rob's point about clients
Mhm.
bringing ideas to us if we follow up on it. And today I think I have every one of my clients in that fund.
Oh, it's interesting. Yeah, that's probably good. You feel heard as the investor and
Right, right.
have that trust grow even larger. Well, you guys gave me a great segue here, even though we didn't rehearse. And the segue is, how often do you look for a new product to add, a new fund? What's the trigger? What makes, obviously you just shared one trigger with us. A client walks in and says, I want this area or whatever. What else? What are the triggers?
For me to go?
Sure, Rob, go ahead.
Sorry, Al. I think in my practice, we're always looking for a new idea. We're always looking to improve what we've done. I don't think there's a way for us to say, hey, this is our spot, we've got it. Here's our allocation to small cap. It's the best one ever in the whole world. That has been and ever will be. So we're not even taking interest on that segment of our allocation. For us, it's about continual improvement for me and my team, and having resources come to us, mutual funds, ETFs, people coming to us and saying, hey, you're missing something here, or have you thought of XYZ, whatever that piece is. It keeps us as advisors on our toes. It makes sure that what we're presenting to clients is the latest and greatest. It helps us forward look of what might be coming down the road in that segment, and it helps us prepare. So I don't think there's a specific trigger per se. Now and again, a market event might cause us to rethink, what we're doing, or a trend, even worse. If it's not just an event, but it's a trend, that'll heighten the awareness. But I think for most advisors, we're all very interested in being up to date and informed on what the next best ideas are.
Okay. Al, would you add anything to that?
Yeah, and I would say that when we think about the fund companies, I think it's really one of their biggest challenges is to break into the roster of advisors that have, their favorite families of funds. I like to work with larger families of funds because I like the fact that they have maybe 2 or 3 solutions within that family that I can select from. They don't always have the best ideas everywhere, but there's probably 2 or 3 within the large families of funds. And I like working with a selected group of their representatives. So I like to just kind of keep it simple. But then with that being said, with my background in alternative investments, I do have unique needs that many of the boutique firms fill. So I've had to go and look for companies that can do managed futures in a good fashion, hedge funds, the commodity asset class, et cetera. So I think it's that combination of working with larger families and having them in our meetings bring ideas, as Rob mentioned, but then trying to focus on those unique ideas and going elsewhere.
Okay, great. So as you're looking for these ideas, these new funds that you might consider, what is it that attracts you to them? What would be the important features that you're going to kind of hang your hat on as a starting point, and then as you dig deeper?
I would say in looking at a fund, I think we look at consistent performance, manager tenure, and most importantly, a fund that's been true to their investment philosophy.
Mm-hmm.
So, if I think about convertible securities as an example, you can manage convertible securities like bonds, you can manage convertible securities like equities. Our preference is to find that fund that manages in that total return area. So I look to make sure that these funds are consistent with their investment philosophy because I want them to perform the way I expect them to perform.
Okay, right. And Rob, would you agree? I heard management tenure, I heard philosophy.
Absolutely. We look for expense ratios. I'm sure Al does the same, and turnover. How often that fund turn over from a taxable standpoint? We kind of want to have an idea of what's happening with that fund. I think there's some other things, maybe some less quantitative things we look for. ESG is real popular right now. Environmental social governance. That's something that we've been really looking into. One of the summit group that I work with are very big on ESG. And that's become more and more in a spotlight. And I think more and more funds are in that space. I think that's good. The other thing that comes down to a lot of times, because you'll get several funds or fund families that are pretty close, right? They're very similar as far as numbers go and performance goes and tenure goes and some of these great things that Al was mentioning. And then the question for me is, well, how do you decide between two, really good options? And usually what pushes that over for us is our personal relationship with the wholesaler, with the fund company, or access to information and people in that company. If it's a big client and we want to get the fund manager on the line, well, if the company's too big, that might be kind of hard. But sometimes some of these smaller and boutique firms Al's mentioned, you can actually have that person talk with the client or present. And I found that to be very powerful. So it's more of the qualitative side combined with that quantitative piece that helps us make that close decision.
Mm-hmm.
Okay. So do real quick on this one. On the last two funds or so that you've added, can you tell me about how long that was ago? Was it 2 years ago, 20 years ago, 2 months ago? How did they come to your attention? Were you out looking? Was it research, third-party rankings, see them in the news? Al?
Yeah, I would say it was the good old-fashioned way where the fund's representative was sitting in my office and we started talking.
Okay.
He was asking me what changes I was making in the portfolio. And the last one that I have to think about, I was saying that I'm looking for a SMID, half mid-cap, part small cap. And he says, oh, by the way, we've got a great SMID manager within our family. I took a look at it, and it was actually a very good fund, performed well, compared well. And to Rob's point, you appreciate the fact that somebody brought you that idea or brought you that solution in the conversation. The other fund I have in mind is one that we had a conversation in my office with the fund representative. We were talking about technology and innovation. And he said, oh, by the way, we've got a fund and it's been around for 20 years. I never knew about it, but it was exactly the fund that I wanted. And it helped me diversify my large cap growth allocation.
Okay.
So the old fashioned way, I'd say.
Right. Although you're talking about larger companies that have the wherewithal to be sending representatives to your office.
Yes.
What's a smaller fund going to do? How would you uncover any of those, or does that just not any?
I think that's the challenge. I get emails all the time. And that's the challenge of small companies trying to break into the roster, and it's tough. But again, if there's a unique need that I have, maybe there is a smaller company that fills that void for me. So that would be the opportunity.
Okay. How about you, Rob?
I would agree with Al. A lot of times it's the person that sits in front of you. The one thing is relating to the the small piece that Al was just referring to is you can be relevant without being in person, right? So the boutique piece that Al's talking about, if he's getting a ton of emails and the emails are uncreative and unoriginal and they immediately hit the delete box, then they're not going to do anything. But if they're able to generate an idea or a thought with Al, then it may not be immediate. It may not be an immediate need, but it will stick. And if you can find something that sticks with an advisor, they'll come back to it and say, oh, I remember when I got this from Rob Barker, and let me call him on this. And so I think there's something about being consistent, even if you're not in the office, and being consistent, providing an idea to the actual advisor, right? If it gets to Al's secretary, that's great. And she may pass something along, but most of that probably isn't going to get passed along. It has to go to the person making the decision,
Right.
To have the most impact. And I think that gives the small companies, technology has really helped the small company that's managing expenses get more exposure. There are a lot of, we heard earlier about the online delivery channels, right? Social media that you can go through, that you can talk about, that helps get you presence. But really, I think it's that connection that closes the sale.
Okay, and I've got some social media questions coming up, but let me ask you this first. Rob, you just kind of referred to, you want to see some creativity. You want to see an idea that you're going to remember, a couple of weeks down the line. Can you give us any examples of things that have caught your attention?
Yeah, we had a group here, deliver us cupcakes via a drone.
Okay.
Who would have thought, right? I mean, and at first I thought, wow. I mean, that was kind of interesting. Very creative, very original. I mean, it was when we were in the office, so that dates it a little bit. But it stuck. It actually stuck with us. I think the other thing, and it tag team on your previous presenters, is some of the merch, some of the swag that companies have. I don't know how many golf towels I have, right, or have received. Probably, I mean, they're okay, but I don't know that they're that meaningful. But there are other things that companies give. I think one gave us a charger, a portable charger for your phone. Okay. Around one year, we had a guy give us a hammock. Wow. And it was random, but it was unique. Right.
So you're saying traditional marketing really is what I'm kind of hearing. So something that you're going to remember and put on your desk. Thoughtful. Yeah. And unique, and a little message that goes with it. Yeah. Thinking about you. Hope you get some time to string this up between two trees and relax this weekend. Yeah. Yeah. Al, anything beyond tchotchkes that has been a good hook that you've seen in an email or mail?
Something that we used to do at Calamos, and I still appreciate it now, is that sending out postcards with a quick idea on the front and the back. We don't want to open up envelopes. We don't want to look through things. But if you see a postcard that comes in, it has a very clear message on the front, some detail on the back. I think that's a great way of getting in front of people and creating maybe that unique aspect that Rob was mentioning.
Okay, all right. So that does segue to did you have something, Rob? Like you?
I was say there's a great book written called Blue Fishing. I don't know if you've ever heard of it.
No.
But it's a book about these creative ways to get in front of people. And when Al mentioned postcards, that's exactly what the author talked about. He was on vacation, got a postcard, just thinking of you, dropped it in the mail. Let's talk when we get back. And it just keeps you present in the mind of the advisor.
Okay. Blue fishing, like BLUE?
Yeah, like one fish, two fish, red fish, blue fish.
I know that one.
Blue fishing.
All right. Well, great. Well, that again rolls right into our next question is when companies do communicate with you, and let's go beyond that's kind of branding, I think, what we've been talking about, and a couple of ideas, but there's so much more that they put out. I'd like to kind of pick your brain of which are the gotta do it's and which are the oh, I wish they wouldn't bother. And things like websites, education, stories about the fund holdings, commentaries, et cetera, et cetera, et cetera. I've got a list that goes all the way from A to R. So what comes to your mind is the most most valuable kind of content a company can provide for you? Al?
You know, in that regard, I would say I really like to get on the Zoom calls that companies provide when they talk about the economy and the markets.
Okay.
You know, I'm with LPL and they do a great job at that, but I always like to hear from other firms because there are some fantastic communicators out there that talk about the economy, that talk about the markets. And I've got one in mind. Every time he's on, I'm listening. And, it's from a larger firm. And they also have the resources to provide statistics on the markets and the economy and all of that. And they keep it updated all the time. So I like that a lot when a firm provides me with that kind of service.
So that one that you always listen to, what is it that really attracts you to them, makes you listen?
I think it's the experience of the economist, the way he communicates. And there's not a lot of selling that goes into that. I mean, they may mention one of their funds here or there, but the whole idea is on a consistent basis, hearing about the economy, about the markets from somebody that I respect.
Okay. And Rob, how about you?
Yeah, I always like to get more information. And I was talking, I thought one of the characteristics that I always look for and hope to have in myself is curiosity, where we're always curious. We always want to be learning and growing and advancing. And so what the company can do, like Al said, is give you those opportunities to learn, become better, get a new idea. Like I've mentioned this several times, it's kind of a theme for me, but that Zoom call is a great one. One thing I like, I was with a company the other day. In fact, I got there. It was a Pack Life guy that came to visit me. It was a Pack Life meeting, but he gave me a really good one pager. It was something I could put in front of clients. It's already client approved. It was about dividends, and with inflation and things going on, that's becoming more of a conversation. And so what I really like is for whatever fund or multiple funds, like Al says, companies may have, a lineup of funds, but there's an easy to read, very well designed one pager, not just a one pager that's designed for an engineer, so it's so technical and small that you get out your glasses and a whiteboard and you try to read it, but one that is well designed for a client. And I found that what a great time that's been when I had a need and I had one of those with me that I could slide across the table to the client and say, what we're talking about, I think this fits. And the client, again, doesn't need to have his CFA. He doesn't need to be securities licensed with decades of experience to get it. And those are meaningful. And they're simple. And I think most companies have them.
Okay. Okay.
And Marilyn, in that same regard, I'd like to reiterate something that Rob said before, because we're talking about the communications from the fund families.
Right.
I always like when I have the opportunity of talking to either the portfolio manager or at least a portfolio specialist. It doesn't necessarily have to be the portfolio manager, but if the outside representative can schedule a call where I can talk to either portfolio manager, portfolio specialist to just get those insight ideas from them about how they're managing the portfolio, what's going on with the marketplace, et cetera, that's also a very big help.
And Rob, I see you shaking your head in agreement. Is that?
Yeah, I 100% agree. And it took me back to earlier in our segment here where a lot of times if a new company comes to me and all it is business, I don't know that they're listening to me, right? I don't know that they've heard what we're after. I look for some of those companies to come in email, social media, or in person on a Zoom and say, hey, Rob, what is, kind of like you led the call off, Marilyn, what's your biggest struggle? And what part is your biggest struggle? And let them help discover where they can be valuable. And I think in that process, you build a relationship that's not, here's my numbers, use me, but it's, here's 3 or 4 reasons why this fits to the problem you're trying to solve.
So a very custom approach.
Yeah.
What do you gentlemen think about podcasts and videos? How helpful are those?
Rob, maybe you should take this because I'm not a big podcast guy.
So I like them, but I think to broadcast a podcast, there's some inherent risks there, because then if you do it too often, you become noise.
Okay.
You become what is noise. And so I think you have to be consistent on your strategy if you're going to do podcasting. If you're going to do, if you're doing it every day or every other day or every week, now maybe you're a little different, but I think Al and I'd be like, well, we'll get to you when we get to you. Or what topic are you talking about this week? I'm not going to dial in every week. And so I think if you're doing some of those more online, newer forms of marketing, you still have to make sure that content is key, and don't do it so often that you become part of the financial news noise. Yeah. Because I'm sure when Al puts up the journal like I do, one day it say all signs are pointing north, and the next day we're down 900 points by midday. So we want to avoid that. I think a lot of times with our clients and getting clients on podcasts as well is what can we do to minimize the noise and the drama? It may not even be the best return that wins, but it's the least dramatic fund, right? It's one that fits in there, and it doesn't cause me as the advisor any heartburn. I'm confident in what I've got there. It fits the space, and it's not necessarily just chasing that big return, but those type of things that relates to podcasts, information sharing, and back to where I started. My biggest concern is being relevant.
Okay. So in terms of these newer, continuing on that vein of the newer ways of marketing, LinkedIn, Facebook, Twitter, etc. You participate? Not participate? Al, I'm wondering what your answer could be.
Yeah, no, we have a Facebook page that I never bother with, and we're on LinkedIn. And with my son joining, we're going to be updating that in a better fashion. But and to my son, at 36 years old, that's much more important way of communicating, and especially for his age group. So we'll be doing more and more of that, but at least we have the basics done.
So that was my next question. Do you think that you will begin, maybe in your case, Al, you'll begin to use that to prospect for younger potential prospect?
Yeah, I think so. I think that's one of the advantages. I'll leave it up to my son on how we want to do that, but I do think there's advantages to doing that, and we'll be using it more and more now.
Okay, Rob, do you pay attention to the social media?
Yeah, I think that's a kind of a hurdle that we all have to clear. I don't know that it closes a lot of business as far as prospecting goes, but where we use it is for research. If we know of a prospect, can we use the connections in Facebook and LinkedIn and Twitter and all the different social outlets to find out what they're interested in and where they go and what circles they're in, and do they give charitably, and you can really create a prospect profile using those tools.
So from the perspective of our listeners today, though, the fund companies, if they're posting regular content, is that something that could be of interest to you if you're going to be there anyway? I know, Al, you're not really, a user yourself, but Rob, maybe you want to take that.
So yeah, we're there anyway, but it'll go back to, I think you have to be there, but I don't think you expect big returns from your daily LinkedIn post. Okay. Right. You're just being there to make sure that you're being seen. It's not the tool that gets you in the door initially. I think that it's, like I say, it's a hurdle we all have to jump over. We all want to be there, but when it comes to the companies we're talking to getting through to the advisor, LinkedIn may have a hit, I don't know that it's the most effective use of like marketing dollars if you're going to put it there.
Okay.
I like the podcast thing. Different pieces like that. For me personally, better than a LinkedIn. I think some of that becomes what I just referred to as noise.
Okay.
Because you have 15 or 20 or 30 or 100 people posting those.
Mm-hmm.
And by the time we're through our day and trying to manage our time, it's hard to even want to sift through them.
Okay. Well, I'm certainly picking up from both of you, and it makes complete sense that you are relationship people, both in working with your own clients and in being a client of these fund companies. So that all is very consistent. Let's turn to our questions. We do have some from our listeners, and so why don't we grab a couple of those for the last few minutes here? And let's start with this one. I'll go to you, Al, first. Okay.
Okay.
You did mention you like it if you can get a wholesaler or a manager to review some of your portfolios and to offer ideas for individual clients. How about actually having meetings with individual clients? Would you like a portfolio manager or a portfolio specialist, as you said, available to talk to your clients one-on-one or in groups?
That's a real good point, because I do like having quality people in front of my clients.
Mm-hmm. Mm-hmm.
And, we still do seminars. In the last 8 years now, we've done some 34 seminars. So I do like when we can get either the outside representative or portfolio manager that will come and present educational seminars to our clients. And from the fund manager's viewpoint, and I remember this at Calamos, as national sales manager, I would say the best approach to take is to be in front of the end user, the end client, because you're clearly telling the story. And there's two things that can happen: is you can get that client so excited about your product that they'll want to buy it. They'll go to the advisor and say, hey, we need to do this.
Mm-hmm.
And the second thing is, every time you hear the story or present the story as a fund manager, you're reinforcing what that advisor knows about you as a firm and about your products. So it's a twofold approach on the fund manager's side. And I think it's a win-win.
Okay. And on these meetings, just as an add-on there, it says, are you expecting the manager to put the bill for a dinner or something to that effect?
Under the rules and regulations, they typically do. And we appreciate that. We'll do a seminar. We might offer a lunch.
Okay.
Might do a breakfast on a Saturday morning. We always keep it reasonable. But yes, we do look for that to happen.
Okay. Rob, how about you? Have thoughts on that idea?
Yeah, I like listening to the fund managers, and I like my team listening to the fund managers. And we kind of have to pre-screen them before we put them in front of a client or a group of clients like Al was talking about, because most of these people are super bright, right? They're really just genius in their field, and they really know, like, not just the details or the forest from the tree, but the individual tree bark and the organisms living within the bark. I mean, they really know their stuff.
Right.
Yeah.
And sometimes I call it, and not to be offensive, but I say, you're going nerd on my clients, right?
Mhm.
You're talking about things that are so detailed that you lose them.
Mhm.
Right.
And so I like to vet them before we put them in front of a seminar, kind of like Al was talking about, because I don't want to discount their expertise at all. And I want to create champions through that seminar process, where they know, oh my goodness, I just heard this guy or this lady tell me these 3 things. That's impressive.
Mhm.
And I think if you get too many of those things, the impressive details, that they wash.
Okay.
So we like using it. We like having that access. And maybe it's you bring one of the wholesalers will talk to us, usually really good with people, really good at presenting.
Right.
And then they have the fund manager to kind of back up for Q&A or, some technical questions that come up.
Mhm. Mhm.
Yep.
Okay.
Good point.
Great. Is there anything a fund company could do that'll turn you off? too much information,
Yeah.
too many emails?
Oh, easy for me, Al. I'll jump
Yeah.
in.
Yeah, no, go ahead.
Don't respond to me.
Ah,
If you don't respond, so it's a hard game because they're emailing me 100 times, and I'm emailing them once, and 50 of the 100 or 75 of the 100, I didn't respond. And so it's a little disingenuous, but it is really how we feel. Is that, hold on a second, you're coming after. If I send her a question out and I don't get a response, or whoever answers the phone doesn't know what they're talking about,
Right.
that's a nail in the coffin for me. There's too many choices for us willing to answer the phone and be responsive and timely, that non-response and they're out.
okay.
And I would agree with that. And I would say sometimes if you are the target of a fund family that wants to work with you, sometimes too much persistence can be overwhelming, and that's a turnoff.
Okay.
Too many attempts at meetings, or too many meetings, or too many, calls, or what have you.
Don't
That
bug
can
me.
certainly be a turnoff.
Yeah, don't bug me. Got it.
Yeah, there's some art to the bug though, right? It's not just science. If all of a sudden you say to Al, hey, I would really love to work with you, and then you disappear, Al will say, well, golly, you really didn't want to work with me that bad. But
Right.
and so you've got to balance the I'm
Yes.
a bulldog, and I'm a lab at the same time, trying to chase you and be your friend. And so you really have to balance the art of the chase for a new advisor, and kind of take their temperature. And then I found that just ask, hey, Al, if I start bugging you, let me know.
Yeah.
When I was at Calamos, I told our representatives, I said, what you need is a professional sense of urgency.
Huh.
That's the way to approach it.
Okay.
Yeah, I like that.
All right. We're closing in on the last couple minutes here. If there was just one thing, let's say there was a brand new fund that wanted to get your attention. If there was only one thing they could do, what would make you sit up and take notice?
I would just say being different. There's, when it comes to equities and bonds, it all gets pretty straightforward, pretty convoluted in a lot of ways too. I would say that if a fund has something very unique,
Okay.
whatever reason, that would make me take a look. And I'm not quite sure what that would be, but
So you're talking more about a strategy that's a little bit off the beaten path.
yeah,
right?
maybe it's just a strategy that they have. Maybe it's an approach that they have. Maybe it's a water fund that I never knew about.
Yeah.
So I would say something unique is the best way to start up the conversation.
Okay, but let me just twist that question a little bit. Okay, so let's say they have that. How are they going to get your attention though? Are they going to email you? Are they going to be on TV? Are they going to talk to individual investors and hope that they come to you? What?
Maybe to Rob's point, they have a drone bring in a bottle of water.
Yeah.
You want the drone? Okay.
That's right.
Look at our water fund.
Okay.
I don't know. That's a good question, Marilyn.
Okay.
I think there's one that resonates with me, and that is in the sales world, which is what we're talking about. For these companies, there's a certain amount of lonely work that needs to be done, and if behind the scenes research work is what I mean by that. When no one else is around, you're just doing your research. When Al's putting together his portfolios, right? He's trying to figure out these ideas. It's not in front of a client. It's usually in his office, doors closed, and it's the lonely work. And if a new fund company wanted to get in front of me, hopefully they would have done some due diligence on who is he, what does he do, where's he been, and then through that due diligence or that lonely work, you find an area of connection, and you send me that. And then all of a sudden, whatever that connection was it we went to a same school, you knew someone who went somewhere, or hey, I really also love coaching little league baseball and football, or whatever that was, whatever you found out about me through your research, it wasn't generic.
Okay.
That's what gets through to me more quickly. So that was different. Like Al was saying, it's unique from an idea perspective.
Yes.
But I'm saying it's unique from an approach perspective before I
Okay.
even get to the product.
Okay. So it could be an email, it could be a letter, it could be a postcard, it could be a call, but it says, hey, I noticed that you went to, and of course,
Yeah.
I've forgotten the school you went to, but I know it's out there in Utah.
Oh, or we were on the SunStar podcast
Conference.
together.
Okay.
The conference, we were doing that together. And you said something that resonated with me. I'd love to talk to you. You know, I think that's a piece that helps get through the firewalls.
Watch out, you might get a few of those.
Happy to take them.
Great.
And Marilyn, I would say too, just quickly, is the leveraging of relationships, so that let's say we're in a big office and there's other advisors in the big office that I respect, and they have a relationship with that fund company.
Mm-hmm.
I'll take that referral, to look at somebody because of somebody that I respect has made that introduction. Yep. That's another way.
It's true.
Beautiful. Well, Al and Rob, we are at our time, and I really appreciate the time and the effort that you've put into this, both of you. This has been a terrific session.